I like smoking more than I like drinking. I'm
All
also a
right.
cider.
And we are now live. Joe's got himself a new cigar he's lighting up, and it's a pleasure for us to be joining you here this evening. I just cracked myself a tasty beverage, and we'll be looking forward to diving into some charts as we have finally gotten some action in the markets. We have been doing a few shows here without too much action really at all to speak of, which just kind of leaves us looking at a lot of similar things and not having too much to talk about. So it is nice to have a some volatility here. It will give us plenty to talk about, that I am sure. And starting a few minutes late here because we did get into a little bit of a discussion about one of Joe and myself's favorite shows. It's like a documentary movie, we'll call it, that both of us have watched. I said more than 10 times. He said maybe more than 100. And since Fibbo hadn't watched it, that's why we got excited to tell him about it and figured that could be the shill for this week's show. So anybody out there who is familiar with the movie, whatever you want to call it, Waking Life, that is one that is highly recommended. A very good philosophical movie. Joe called it a philosophical gold mine, and I couldn't agree more. You watch it a new time and you get something different out of it every time. So anybody out there looking for something good to watch, would strongly recommend Waking Life by, let's see here, 2001 film by Richard Linklater, Sandra Adar. You'll figure it out. It'll be the first one that comes up on YouTube. So on Google. So thank you guys.
I'm actually pretty pumped to watch it. You guys have hyped it up pretty good.
Yo, it's a timeless wisdom. It's as timeless as the allegory of the cave. It's as timeless as a number of beautiful philosophies.
The allegory of the cave.
Like the allegory of the cave would just be like one little 5-minute clip in this movie, right, Joe?
Yes.
That's all that would be.
It would explain just the allegory of the cave and then move on to this next, maybe even completely off topic, completely different philosophical observation that leads to an epiphany or whatever, or at least leads to the journey of the pursuit of one. It is really well set up, the movie, and directed, and clearly a passion project that became a masterpiece, a timeless masterpiece.
Couldn't agree more. So yeah, strongly recommend that to anybody out there. And if I remember, I'll get a link in the description. So that being said, when the markets are moving, it's always good to start out with our man Joe to see what he's seeing, because by the end of the show, it could have totally changed, and that's what's neat about what he does. And we will be able to hopefully complement that with what Fibbo and I are seeing on the higher time frame. Something that I think the most important thing right now is that we are approaching the highs from 2019, which is a big deal. If we can get back to that area and potentially even reclaim it as support, that would be enormous. I am myself hoping that we get there, but not expecting us to necessarily just punch right through, as we have been talking about for weeks and weeks here, 13.8, 13.9 being our target, Mr. Fibbo and myself. And that I don't think has changed for me. And when you have a target like that, you're not really, that's generally where you would be expecting the market to at least pull up for a step back or something along those lines. So that being said, how are you doing this week, Joe? It's good to have you back.
Yeah, apologize. Wasn't feeling too great last week, but I'm back, and it got the momentum. Things are great, and happy to be here. And I actually have some good news to report here, because I've been really connected to the market, very back to streaming again, recording actually a couple of these very volatile situations. So I've been there and very connected, and of course on the small time frames. So I can switch to screen share. We can talk about it a little bit, and I'd also like to say that really, Tyler couldn't be more correct. My expertise is in small time frame shit. I have tried my ass off to get onto bigger time frames, and I just don't connect to it. So this is my area of expertise. I have to accept that. It's what I excel at. Of course, I can try to grow and master other time frames, but I just want to say that, you know, sometimes you get that little thing that you're good at, and you just, you know, you got to stick with it. So this is how the
Well,
smaller time.
let me just expand on that a little bit. I would actually say that I have never met anybody who is really good at swing trading and really good at day trading. You can combine position and swing trading kind of on the same spectrum. There's really it's completely different ballgame. You might as well be playing cricket versus baseball if you look at like swing trading versus day trading. There's just aren't really very many similarities outside of
So different. It's so different.
Yeah, there's nothing really the same. So I have never in my life met somebody who is an expert day trader and also an expert trader who can hold positions for weeks and wait out for weeks and that sort of thing. It just takes two totally different mentalities. What I have met are a lot of people who try to do both, who are and when Fibbo, he talks a lot about position trading and swing trading. Those are two very similar things. Like if you can hold a position for a month or two and then you just decide you want to hold on for a year or two in a bull market, that's very, very similar. Very, very similar. You're playing the same game. And when you're talking about day trading, you know, each candle, or, you know, you're moving 20, 30, 40 trades in and out a day, that is completely different. So I would just encourage people to ask themselves what works best for them. Do you find yourself having the most success when you are on the 1 minute chart and the 3 minute chart? Or do you find yourself having more success when you're on the daily or the 4 hour? And I always suggest people start out on the higher time frames because it moves slower, and as you're getting your feet wet and getting acclimated. And then after you get some experience there, definitely take just a very, very small amount and try out some really high frequency stuff and just get a feel for what works better for you. And I do my fair share of like day trading, but only as a way to practice. I view it as going to the batting cages. I view it as I'm not in the game right now, but I want to practice my strategy because I believe all time frames are a fractal, and I can implement the same strategy across different time frames. And on lower time frames, I can get more volume in quicker and learn more quicker. So absolutely try different things and then figure out what is working best for you, because once you can really figure out what your weaknesses are, then you can start focusing on your strengths. So I do appreciate you mentioning that, Joe, and just wanted to expand a little bit.
Yeah, and I agree with everything there pretty much. It's well, I'm happy to hear that you said that I don't have to be good at both. I felt like I was lacking because I wasn't, but happy to hear that I'm not the only one. But yeah, you know, a couple months, let's see how things look. Now, this is yesterday's signal, and it's been some time. I'll get us out of the 1 minute. I just want to show you some. You know, this is the original work, SAS 1.0. This one is free on Trader for anyone. All you got to do is click on sharing, type in SAS. SAS 1.0 has been free ever since we had templates sharing. And look how freaking beautiful this was. On the 1 minute chart, we got the top, we got your exits, and I'm going to get back to the trend here in a sec, but we have our confirmation, we have our next move up to a beautiful signal, and you know, at this point I would say it's a discretionary exit. Fair fight in the book, pretty weak on both sides. We could pull up an aggregated order book quickly. My bad. Let me go to danger, and where we do have an order book overlay that is available right here. And so we can see that right now the order book is pretty not, it's not very well defined. Maybe in these upper ranges, yeah, there's a lot of resistance. But let's compare this to, say, something like over here, where the pattern, there was clearly support driving this run. Very well defined support. Even into these short signals, these take precedence. And that's why we'll get back to 1.0 in just a sec. But clearly we've kind of lost a lot of that. This doesn't appear to be, maybe this does appear to be a bit of an overextension gap here, this black space. But we are also just generally vague other than these pullbacks with 1 to 2.5 band support. So I am confident that we're in a range again, at least short term. Clearly, there is two great trades, and and the book is now in a consolidation zone. We're already up to 8,400 Bitcoin against a 5,000, 6,000. You know, at the lowest, I thought I saw somewhere around 4,000. So we're starting to return to some normal numbers. But I just want to get back to the things that were really you know, I think the loudest and should
Well,
have been the loudest.
could you just keep it there for a second? Because
Yep.
I think that just to point out the thickness of that green band and then it thinning out. Are you seeing that as a pretty strong sign of buyers are getting much less interested now up in at these prices?
No,
And now,
all this means, remember, is that the green meant that there was a strong ratio dominance. Now, the fact if it's mostly dark on both sides, like this phase, for example, there really wasn't any definition here. Maybe, you know, it was pretty dark on both sides of the book, which meant that we were closer to a 1-to-1 ratio as opposed to a strong dominance like we have over here. Over here, we have.
right. So wouldn't you agree then that over the past, over the past 24, 48 hours, we've been going on a strong move. And the last time that we dipped, there was a big ratio imbalance of more buyers than sellers being very interested in buying the dip, even though it was higher prices, there were still buyers moving up. Whereas now it seems like there are less buyers interested and maybe more sellers stepping up to the plate.
Yes, it definitely means that it's clearly not this. It's clearly it's clear that whatever is moving up is either equal to or slightly greater than or less than in certain aggregations what already exists as most likely sleepers on the sell side, considering we've now entered a space of Bitcoin price that really hasn't been reached. I mean, in how long, right? On something like the daily, what was it? It was this range was reached, you know, 2019, and just a wick up there, and before that it was April. So, yeah, you know, we're definitely in a space where and that's what I did want to get to was, you know, the concept of sleepers, which I believe you and Fibbo both know what I mean when I speak about, right?
I feel like if what I would think is that you have a order that's just been sitting there, like somebody that's just been waiting to sell. As soon as price gets to 13.6, they just had an order sitting there, and it's just been there for a long time. Is that kind of what you're talking about?
Absolutely. And that is either that, I also call that a static order. So one of the two. Sleepers, I usually refer to people that have been static for a very long time. Okay. So we were in the static zone, but I watched and I went live just after we broke through 13K. There was a 1,000 Bitcoin sell wall, a trigger of stop losses. I watched that carefully as we hit that wall. And we triggered about 200 Bitcoin in stop losses, bringing the wall overall value for at 13K down to 800 Bitcoin. And then the liquidity was pulled. The same thing happened at 13.5. There was less to overall liquidity at 13.5 on the sell side, maybe closer to 500 Bitcoin, which is normal. As you move higher up, there's going to be less and less resistance, which is why we're flying as you know, like, you know, bat out of hell. But anyways, I've been noticing a lot of these people that I would think are sleepers are not behaving like them. They're behaving like dynamic orders or even spoofers in a way, like top of the book spoofers. So this is very, very, very unusual to me. I don't think that this is necessarily manipulation. I think this could very well be sleepers that woke the fuck up and said, "Whoa, is this the bull run that we've all been waiting for? Is my trade even worth, you know, exiting long or whatever?" You know, I think that this market cycle and structure, fundamentally, psychologically, could be there. I think that we have evidence to believe that it is very different than it's been for a long time.
Yeah, I got a question. When you talk,
Can I just chip in real quick before that, because
hell no, I'm just
something that was really interesting that I wanted to touch on, and then I'll definitely send it back for the question in terms of this is where I would be really interested in the order book, doing some of those things that you're talking about, where the most important price since 10,000 for me, since the consolidation it's having, is the 2019 high and the 0.618 retracement right in there. And that's where the bigger players, like if you have a lot of money and you're trying to, make big trades in Bitcoin, you can't day trade because there's simply not the liquidity. If you have, tons and tons and tons of money. So the more money that you have, the higher time frame you have to trade if the market doesn't have just tremendous liquidity, if it's not, Apple stock or something like this. So therefore, the guys that are really the big players, the biggest players in the market, they're just going to be maybe making a trade every 2 years, where they spend 6 months to 12 months accumulating everything that they want to buy, and then they spend 6 months to 12 months selling everything as it goes through that cycle. And when you get to these key levels is where these guys, I would expect them to step in, and I would expect the order book to act much different when these guys step in that 5% of the time or so, and really kind of, now it's like the big fish in the pond now becomes the one that gets eaten by the bigger guy coming in behind him. So that's kind of how I think of it when we get to some certain very important long-term levels. Specifically, you can just start by looking at yearly and quarterly highs and lows, and you will see how those can be very important levels. So Fibbo, please go ahead and chime in with your question.
Yeah. Mine's probably a little different, and I was just wondering. Mine. When I talk about spoofers, I get a real interest there, and I was just wondering if you saw anything from when we broke out around the 11.3 area, and then we've been running since then. Were there any specific levels that you saw spoofers on the way up? And I was just kind of curious if there were certain levels that you noticed that spoofers were kind of hanging. And I've always wanted to know if there's a correlation to a strong fib level, or is it just a round number, or I'm always curious of what levels these guys and gals go in and just put huge orders in and then just take them out. And I was just wondering if there's certain levels that you saw that was significant or not. I don't know.
Yes.
I'm always curious about that. So
yeah, this is actually a great question and a relatively simple answer for two answers. One is, I was not in as good of market watch as I normally would be. So I wish that I could say I was watching this the same way that I was watching the 13K and 13.5 or 12.5 and all that. Yeah. But in the order book top levels here, you can see as orders flashed, they grew in size, they dissipated. This is very dynamic behavior, whereas this is almost static and in nature, and even getting bigger as we entered that price range. So more people stacked as well as it got annihilated. And then that literal horizontal became a short-term resistance, support, I should say, even long-term support. So you could see a bit of spoofing here. You could see some real shit here, people really stacking up their asks and getting filled. You can see people dissipating. I think there was one that was very similar to this. I might be thinking of this range as we broke the 12Ks, where it was really flimsy, stacking and unstacking, and you could see right as we approached that space, they pulled their orders. Here, on the other hand, this got broken, very, very, very clear. So it has been very spoofy along the way.
Could you go back to that one, that last one?
Like these two here.
Yep, that one.
Yeah, that one's interesting.
Yeah, that's very interesting. I'm making some notes. Appreciate it.
What price range? What is that?
That 12, is the price range of 12 flat. 11, okay. Yeah, 12 flat.
Okay.
So that's and remember, this goes back to my rule about breaking walls by a certain amount of money. We reached a high of 12,038, which is only 35. I think that a minimum of $35 is required for the triggering of stops. But interestingly enough, the triggering of stops stopped at 12,000. The price continued beyond that, after walls were pulled. Very, very different distinction, which is why we only flashed so, very, very lightly off the top of 12K. Yet it still wasn't enough to shake any bullish sentiment. We continued on up, and clearly people were getting very nervous as they approached candles. I mean, you could see people pulling their orders that had been there for maybe even hours, possibly days, because at this point it's only measuring certain distances from price. But clearly 12K was one of those areas that even strengthened as we got closer and got annihilated, but it did include some spoof. So that is something I could say. Or am I mixing that with 13K? At this point, we've gone through so many thousands, I'm not even sure which one I'm referring to. I think it's
Yeah, I can sum that up very quickly. And there's some really good concepts there that to touch on some core beliefs or core just views that I have of looking at the market specifically as it pertains to volume and the order book. So a lot of really good stuff there, and I'm glad that you were able to bring that up. I might have to have you pull the chart back up. No, I've got my notes. So the first thing is we'll have you pull back up a chart just so people can see. The first thing is I want to notice the major difference that occurred at 11,600 and then 12,000 compared to above. So at 11.6 right there, we see that it just smashed right through, right? And it thickened.
And it grew bigger as it got closer.
So it grew bigger, like as we're getting closer, the order book is more bearish and bearish and bearish. So if you're watching it in live, you're seeing, oh my gosh, look at all this sell pressure. And then boom, there was so much demand, we smashed right through it. And when you smash right through a big level like that, that is night and day difference than when you just come up and all of a sudden the orders disappear. So now price just goes up. You could have one guy buy $1 worth of Bitcoin and the price goes up through 11.6, or you could have 10,000 people all buy one Bitcoin and the price goes up through 11.6. In the second situation, that 11.6 should become a very good level of support. If you actually bought through a ton to get through, now everybody that sold, they're going to be wanting to buy back. And furthermore, the price is going to be not wanting to let them buy back. That's going to try to leave them behind. So look at that back there at 11.6. Notice how price never retested that price. So if you say sold, you shorted 11.6 at that big sell wall, and then you tried to get out at break even, you never could. And that is the how the markets will kind of tend to melt up sometimes like that when you get a bunch of shorts or just spot sellers that are now underwater. They're just like, all right, I'll get back out at break even because I was not expecting this just smash right through like that. And then as dips come down and it doesn't get there, now they start moving up. And then the more that happens, now the price is building pressure and then it's liable to just go ahead and pop again. So it happened at 11.6 and 12. And then once we got above at 12.4, did that get pulled or was that bought up?
It looks like 12.4 was weak. And there was, by the way, there wasn't any resistance. I mean, look at these walls. This is 13.2, which we did visit. But I mean, we're talking very sporadic and weak $100 aggregation walls, $50 aggregation, a little more technical now. Yesterday it was a bit more sloppy and it looked a little more like, $3 pockets, $9 pockets. Now it's looking a little bit more well developed. I think price discovery is starting to build some sort of structure up here.
So I guess just to finish that point is that once we got, let's say above, so like once we did get up to 12.5, 12.4 there is that thick red line. So let's just say that was a lot of Bitcoin bought up. Yeah, right.
Well, to answer those questions, yeah, you can see that the walls before they even got hit turned almost invisible. The liquidity was getting pulled minutes, hours before getting chopped.
So there we go. 12.5, the liquidity was pulled and we popped through. So that's night and day difference. That should not become support based on the order book. And what we're seeing here, that's going to be the level where it looks like support keeps turning, resistance comes support, and then all of a sudden you get up to where these levels where just very little Bitcoin was actually bought to get through that level, and it should just fall right through with that big, red candle. I'm not saying that that's what it should do right now, tomorrow, or whatever. I'm saying that when price does come back down to test 12 for it, that'll happen again eventually, I'm sure. That I don't think it should hold as support if we don't really, move in a big way from here. But I do think 11.6 to 12 could be a very interesting level for the other reasons, because if we really bought through a lot to get through there, and then we follow through, if we come back there, the guys who were not over leveraged or patient enough or whatever, I think that there's going to be a lot of demand at 11.6 to 12 based on what you're showing us. And that's why I would look to draw those horizontals anytime you had a really big level that got eaten through. I would just right away draw a horizontal right there and have that on my chart. And then the next time price comes down, it would remind me, oh, this is a very important level based on the volume that was bought up here. And that's what the visible range volume profile is going to be kind of illustrating and doing a very good job. But I think this can be much, much more precise. So yeah, a lot of really good stuff there, and glad that we got to cover that.
Yeah, and there's a reason I asked that, because I was wondering what certain levels there would be. So when I pull up my charts, I'll explain why.
And I want to learn. I'm gonna need. I wrote the message. I need Fibbo to really take me on a Fibbo journey, a magical Fibbo journey, because I really think it's about the horizontals. They are very, very important, and I think fibs are really they're starting to speak the language to me, man. Ever since that bird photo, man. Or
There you go.
the booty photo.
There you go.
Which you didn't send me for, I found that on Google Images.
Oh, did you? That's awesome.
No, I'm just kidding. I was just trying to insulate you from any.
Oh, I got you. Let me pull some up here.
All right. Before you do, let's just get Joe's conclusion. You seeing this as a toppy area, or you seeing enough support to make a new high?
I think we're in a macro bullish trend temporarily. I don't think that this is a top just yet. It is kind of starting to look a little toppy. I'm glad that we had that final impulse to kind of give us some shorting opportunities. It shows that there's definitely something up there, and it means that buyers are going to have to step up. And sellers, they really don't mind if they're really smart and they know the market, and a ton of people do. They let their orders get filled. They take the limit orders, and they don't deal with market orders very often. So I'm a little, this is kind of a liminal space for me. Breakouts and breakdowns and stuff. That's your guys, man. And I hate to say it, it's just I make corn, and I scalp, and I can trade with different leverage because I'm in a different mentality. And so I'm actually really looking forward to getting into fibs, because I really think that that's one of the big missing pieces of my puzzle. And I have been looking at order book data on larger time scales. We can hit that next week, and I'll hopefully produce some better results with different ratios to try to build some more some more dynamic order book use, on top of just short term and to be frank, tedious trading. High frequency trading is just oof. You're in and out, and you're really, it's like you're committed to a game of poker or something. You're playing until sometimes, till classes start at the beginning of the day in Bali.
Yes, I guess that could happen. And I would agree with you that fibs and sacred geometry are the thing that is missing from everybody's life, because we could all understand that better. So another great shout out for anybody wanting to learn more about really, what fibs really mean, where the underlying essence of where that comes from. Go to YouTube and type in Sacred Geometry Movie Spirit Science. Spirit Science is the YouTube channel, which is literally the best YouTube channel that there is. There isn't even a close second. And Sacred Geometry Movie is incredible. I've showed that on the show many times before. Have you seen that one, Fibbo? Sacred Geometry?
Yeah, no, you sent it to me. I watched it at least 3 or 4 times already.
Oh shit!
I mean, because there's a lot of good information. It goes quick. They talk fast.
Yes.
So there's a lot of information out there. So I had to watch it a few times to really get some of the stuff. But
I'm so glad to hear it because it goes like an hour and a half.
Yeah,
it's like an hour and a half, and it goes very. The hour and a half could easily be 5 hours. I mean, it goes so fast and quick.
Yeah.
I remember
I had to stop it a few times because I'm like, okay, hold on.
Yeah.
What did you just say? I gotta get that. So yeah, there's a lot of good information in it for sure.
I can't even tell you how many times I've watched that one. And when I shared that with Tyler Jenks, I shared it with him like on a Tuesday afternoon. And then the next day on Wednesday, I talked to him. He'd already watched it 3 times in like the 12 hours since I'd seen him. It's literally that good. So I'll share that one with you, Joe. So I
was gonna say, you bet you two go visit each other, play frisbee golf, and next thing I'm out the loop.
Hey, at least you know about waking life. So all right, Fibbo, go ahead and take it over.
All right. I got the 4 hour up here. No, one of the reasons I was asking about the spoofers and trying to find like a really good level that you guys are talking about, and you guys are talking about this 11.6, which right now the 61.8% of this latest move off of the latest threshold on the 4 hour is right around that 11.6. It's 11.570. But one thing that's interesting is like what I was trying to do was look for certain levels like that in the order book, because if you're down here and say you're on this move right now and you're right around this 11.6 and all of a sudden it breaks this level to the upside, and it's a major break like what you guys are talking about. It's a what I would call a support and resistance flip. So in other words, it was resistance, but now it's really, really strong support. So one thing you can do with fibs, and I like to do this every once in a while, is if you're around this 11.6 or so, and you want that to be your really critical support level, you could actually move this up to where the 61.8% level actually gets to 11.6 to make that your critical level, which also gives you an upside target. So not to say that it would go there, but you can kind of use the fibs kind of a reverse way. And that's why I really wanted to look at levels where spoofers or what orders are really, really strong and are actually getting broken through, because those, like what you're saying, are going to be a lot more significant support levels going forward than, some of the other levels that spoofers just think that's going to be support or resistance, and they just pull it. So that's why I asked, because I kind of want to play around with that kind of thinking to see if we can pull that kind of information out of that kind of stuff. So
that is absolutely something that I really like a lot. I haven't seen you do that before, and it's something I've been exploring myself in terms of with how well fibs work with EMASAR and the buoy being the critical level for me always. And whenever we get up and break that, if we do break it, then I look to extend the fib to where that would be the 32, or it would become the 61.8 like you have here. And I have found that to be really, really effective for 2 ways. First of all, if I draw that first one to where the 38.2 is at the buoy, and I'll show this on a chart for viewers that can't visualize it when it's my turn. But when I do that and price doesn't get to the 0, it tells me it's a reverse, like it's got no strength, and it's probably just going to range and probably even fall all the way back to where the prior support or resistance was. Whereas if it does get to that 0, then now we've got now we're working with something, and I'm glad to hear you look at that, because I think that the order book could be used in the exact same way like we were just looking at with those.
Yeah, it's a technique I use for a lot of different things. I've just never used it with an order book, like bringing that together, and that's one of the things I wanted to try to use, is if we could get information from a short-term time frame to really know where these traders are really making support and resistance, because some of them are going to be a little bit stronger than others, and I think you can get that information from the order book to give you some type of a technique to see if there is a way to forecast where that high could be versus where that critical support could end up. It's nothing I have really tested yet, so don't go out there and start doing it all over the place. But it's something that we could definitely start looking at and testing along, as we go forward. Or we can always back test and look at things too, but that takes time, and we got other things to do. But that's one of the reasons I asked, because I really wanted to know where that level was. I thought it was around 11.6 also, and that's why I asked, because I could see there was a lot more orders there that looked like it just got blown through right there, and that to me felt a little bit more significant. So.
Absolutely. And just to sum that up in terms of how to do that, how to objectively combine it, is the only way I would know how is with Trader and the free indicator on Trader that is order book top levels, and how we were just looking at when it's really thick and then it thins out before the price gets up there. That tells you all those orders are getting pulled. Whereas if it's thin and gets thick, they're getting added to. So you just find out the two things. Is it a level where a lot was bought or sold, or is it a level where it just got pulled? So the rug got pulled out and just popped. And if you can figure out those two levels, then both should be critical. Because if there was spoofers here telling us that this is going to be our, trying to scare people, and then they pull it all of a sudden, that should also be a critical level for one reason or another. Maybe it's when we fall through and then acts as resistance on like a B, C type of correction. So that's just the two things that if you combine the fibs with that being able to identify when that was spoofed versus when it was actually bought up, that there's going to be something there.
Yeah. Can I just add something?
Did you want to show something? That's why
No, when it's my turn, I'll show that.
Okay, then I'll go back on.
It'll be real quick. Yeah.
Just real quick. On the order book top levels, if you drop it to the 1 second and you're actively watching the market, or the 5 second or something, you can also see a number of times where walls that look strong actually pulled seconds before. It's quite interesting. So I highly recommend, if you are kind of one of those people that can be on market watch, especially during volatile times, and maybe I'll try to catch it on recording one of these days, I will drop it to the 1 second chart with the levels, and I've seen it numerous times where massive walls got reduced to nothing just before, seconds before price even got there, to the point where it wasn't even considered a significant level. So this kind of stuff has been happening a lot. I would recommend, if you are on market watch and it's a volatile time, and we all might spare a moment for a volatile moment here and there, I would highly recommend seeing that, because you will see some interesting anomalies, and I think that's what you said you're looking for, Sock. But anyways, Fibbo, back to you.
Keep interrupting Fibbo, but just to top that off, is to the start of this show, we're talking about, are you a day trader or a swing trader? And if you're trying to be a day trader, but you're not trying to watch charts every single day, all day, then you're going to lose, and you're going to lose very badly. So if you are finding that day trading is what you want to do, then they're really, watching like the 1 minute chart. How much can you really watch? If you're watching the 1 second order book, now maybe you have a tool that you can add to some of your other tools. But if you're not day trading, then there's no reason to be, doing that for anything other than entertainment instead of watching TV or something. So back to Fibbo.
Entertainment. I just want to go through the 4 hour real quick. The last time, the last basically threshold that we had was right here at this point when we moved up into the bull zone here, and we've been kind of riding it pretty well. Because, and when I say that, it's like when we start taking these highs, like if you go to the high right here, the 38.2 is at 11.1, and it can't, it kind of consolidated in here, never really broke down through there. But then it went up to this point right here at 11.7, which matched pretty well with this trend line break. I put the arrows here. So if you were buying here, that could be a first sell area. I didn't actually trade this. I did it all on the daily, but this is what I was kind of talking about with some of the other guys. But if you would have bought in here, you would have been buying on the break, basically the third day, past this point. This would probably be the first objective area. But as you can see, once it got to the 11.7, the 38.2 right here at 11.2 came down and tested it a whole bunch of times, but never really broke through. You know, you had a couple wicks here and there, but we never got that 3 days underneath. So this was so in other words, if you're trading, you bought here, you might have sold here, but this would have been your rebuy right at this point. And then you just kind of keep going all the way up to the next high here, not even close. And then we go up to the next one and work our way up to where we are today. And right now, 12.2 is going to be that first area of possible, you know, if you want to buy into a dip. But the interesting thing is we got up into this 13.2, which I actually took a little bit of profit off my daily, you know, as it got up to that point. And I'll show you that here in a second. But right now on the 4 hour, if you're trading this, one of the areas to look for is kind of that reverse method that I was kind of talking about around this 11.6. If you move it up to the point where you're looking at really, really strong key support, then this 13.2 could be an area of possible selling interest. And we're actually starting to get it a little bit. You know, we just, you know, over the last few hours here, it's kind of coming off a little bit, not real super strong to the downside, but I mean, nobody's surprised that we're getting some selling interest up in this area. So, but it's not really strong support to the downside or you know, really strong, you know, momentum to the downside. So it's going to be more of anything that I'm seeing right now is going to be a bearish correction in an overall bullish market. That's what you're going to kind of look at the moment. So that's what I'm looking at on the 4 hour. So right now, the main level right now is 12.2, but really ultimately is going to be this 11.6 area. And of course we got this trend line. So the trend line could be something along the lines where if it comes down into this area, it could wick down into this and then pop back up kind of thing, you know, because there's going to be a lot of, you know, based on what we saw in the order book, there should be a shitload of buying interest that the closer the price gets to that level, because they want to protect it. Because like you said, there's probably a lot of buy orders in there that they want to protect that level. So it would be interesting to see what kind of buying interest you get if it gets down to that level. So that's the 4 hour.
One thing, just real quick,
yep.
Could you scroll that fib that you have? Just move it, just extend it to the right. Just keep it going to the right until the 38 intersects with the trend line.
Oh yeah, right. Okay.
So that's something that I would pay very close attention to. Anytime a critical horizontal level is intersecting with a trend line, it can kind of give some sort of price and time target that I will definitely pay attention to. And it will also be a very like a reinforced area of support, like the 38.2, like Fib was showing on the break when we retested 11.2. 38.2 is a very strong level of support, and it didn't even have that trend line necessarily established yet. Whereas now, if you come and test a 38.2 with a trend line, now you've got people who don't even care about the 38.2 buy-in because they care about the trend line. And then that's also where you'll see some moving averages starting to creep up and be in confluence. And when you see a big cluster of moving average, trend line, fib support, that's where it becomes very interesting to buy. And that's where you'll also get a lot of people waiting for much lower prices. They're not wanting to buy, you know, maybe 12.2 if we get there in the next couple of weeks. They're be looking for 11.2, and that's when it just doesn't get there. So I just wanted to.
And right now, that's looking about October 28th is the intersection on that. So.
Okay, good to know.
And switching over to the daily, this is where I was kind of talking about it the other day with a couple guys. One of the things that two places I did some selling on the break right here. We broke into this, you know, we went up into the bull zone here on the RSI, got some definite momentum on the break. But, you know, it went up and then we consolidated in this area. This whole area is where I did my buying. I bought almost every day and kind of got an average of around 11,370, I think it is. So I'm long at 11,370. Now, two places that I actually did some selling as this broke up to the upside here. What I do is I take a step back over to this previous high, this red right here, this previous high 100% at 11.9. When I have it highlighted in red right here, this 127 to 141. or this zone in here is where my first level of selling zone is at. And when I actually sold right at 12,750. It was my first sell. I only sold 20% of what I bought as that first level. But the interesting thing is we've actually had one close, two close, and now we're on the next day. We'll see if this holds above this 12.7 or not. Because if we get three closes above it, then this 12.7 becomes a pretty good support. And the reason I say that is if you jump back to where we were the last time we broke this trend line, like right here, we're getting very similar looks, from the last time we had a positive threshold or a bullish threshold. So you would have been buying in here and you work your way up. So as we had this large candle here, it went up and just kind of wicked up above this the 127 to 141 area right in this point, and then retraced back a little bit. And if you actually put in the fib from this move up to this point right here, it retraced right back down to the 38.2 on this one candle on the next day, and then it went high, and then when it up made new highs. But it wasn't until really the three settles above were right here. This day, this green candle, and this green candle was the 3 days above this zone. And as it did come back down and tested this zone or at the top of the zone again, right at this point, and then we were off to the races again, making new highs or higher lows on the way up here until it made up into this area. So I'm kind of taking this look as the kind of thing that we're looking at this moment is we had this large green candle kind of wicked above this zone, and now we're kind of testing it. So if we actually get to this point right here where it holds this support at 12.7, then this moved up to just above, went all the way up to the 200% level right in this area. The 200% level for this one is all the way up around 14, which makes the 13.8 target make sense, which I have the previous high target right here. So if this kind of holds right here, you're going to get probably this next emphasis of buying that could put us into that 13.8 to 14K area before it kind of tops out, and then maybe it gets the correction back like it did on this one, where we had this move up, and then it worked its way down into this reversal zone, and maybe that'll end up doing the same thing. Where if we get all the way up to the 13.8 or 14, then all of a sudden 12K becomes this next support level like it did here. But then if it falls and breaks out of bed, then you're talking back down into the 9,000s, which I don't see that at the moment. But these are the kind of things that I'm looking for as we move forward, is these major support and resistance levels that we're starting to see. So right now, the way this is kind of set up, if we can stay above this 12.7 or so, today or the next 24 hours, even though if it wicks down, as long as it closes back above this level, then I feel like that's going to be our impetus into getting us into that 13.8 or that 14K area for this next leg up. And then maybe, if we do get up to this point, works its way down into this 12K critical support level. And then, maybe we move up higher beyond there. But I mean, I don't want to go into a lot of speculation. I like to take it kind of one step at a time to see kind of where we're at. And right now, I like anything buying on dips at the moment, because everything's really looking at like I said before, it's a bearish correction in an overall bullish market scenario, and until it tells us otherwise. And right now, it's really, I still think we're on a bull run to the upside, where we're going to find buying interest pretty quickly on any attempts to bring us back down below 12.7 at the moment. So that's what I'm keeping an eye on, is that 12.7 level. If we don't close above that area tomorrow or today, it's so weird because it's evening, but 24 hours from now, if we don't get above that 12.7 and it closes below, that's when I would look to the 61.8% level at 11.7, which is pretty daggone close to that 11.6 that we're talking about on the 4 hour being that critical level. So that would be a spot that I would kind of look for. You're always going to look at that shallow fib first to see if you're going to find some buying interest. So if it gets there and it starts to bounce off of that pretty good, that could be an area of support. But I'm looking at the critical support levels also. But right now, that 11.7 is going to be a pretty significant spot for me by the way I look at things. So that's where I'm at on this. The other sell I had was at I sold some at 13.2. I sold another 20%. So I'm gonna buy back that 40% that I sold at some point. It might be right away because if it holds this level, I might want to be long again. But we'll see on how this kind of plays out today or in the next 24 hours. So that's what I'm looking at. And another reason I sold at 13.2 wasn't because of the daily; it was because of the weekly. The weekly, the top of the next level on the weekly was 13.281. So when price got up to that level, I sold at 13.200. That's where my 20% came of because it's the top of this range on the weekly, which also could start to give us some signals that the weekly is some selling interest could start to come into this point and work its way down. And right now, the intersection for the weekly is at 11K, and that trend line right there is at 11K for very, very long term stuff when you're talking the weekly. But the weekly looks very strong ever since at this point into the bullish zone. It hasn't had any problem holding any of the levels, because when you pull this down into this point right here, it held the 38.2 right. Whoop, missed right there. It held right in here at the 38.2. Yes, it wicked, but it never had 3 days close or 3 weeks close below. So the bullish trend remains. And right now, right at this point, it would take 3 closes below 11K or really a break of this trend line, which would also take 3 closes below to really give us a bearish market. And if that happens, then you're talking like way down low. But I don't see that happening. So I kind of like the buy on dips mentality at this point in the game. So I just want to show you the weekly on why I sold at 13.2. And right now, those are my 2 sells. Was at right at 12.750 and 13.200. Those are my 2 sells off the buy at or the average of 11.370. So that's where I'm at the moment.
Can you tell me when is the last time you saw the weekly ADX looking that strong?
It's right at the same point where it was last time, but
the ADX.
Oh, the ADX. I'm looking at RSI. Sorry, I need more caffeine. Let's see. ADX right now is at 26 or so. Anything between a 20 and 30 range, I like. But
especially about 25 for me, that 25 levels where it can bonk its head sometimes.
Yeah, it's right. It's right now. It's right about. It's above 25 at the moment. It's almost 26. But when you go back into this point, back here at this level right in here, it got right about 26 right at this point. And that was, I don't have this drawn in here, but this was a threshold too. And if it kicked above this 26 right at this point, that's when we got a nice, nice run from 4,000 to 12. Yeah. So we're right at that level to where it's not at extreme by any means. It could definitely run for a while. So we're right at that point where I think and of course, I think that makes sense because when you look at the daily, if we get up into this 13.8 and it breaks this 13.8, that's going to be beautiful because when you look at the weekly, you're talking, nice moves. And then you jump out to the monthly and I still got that 22K target. But some levels to watch, if it ends up breaking 13.8 to the upside and that becomes support, you got 16 to 18K is your extension. So I could see that a move to there, a move back down to 13.8, and then a move to 22. I'm not talking in the next couple of weeks. We're talking, months. But yeah. So that was the last time. That was the last time the weekly ADX was kicking that higher. Was way back in this area. So something to think about for sure.
Well, the main thing to think about is the all-time high party that we are planning for the Honest Analysts stream, and that's something to just keep in the back of your mind about how quickly price can move and how you need to be ready very quickly if you are interested in joining us. We recently announced the location. It's going to be in Moab, Utah, a very special place to me and anybody else who's been there, I'm sure. And cheap stuff, camping and listening to music and hearing Joe talk about whatever's going on in his day. So I am very much looking forward to that. And it may not happen for another 5 years, but maybe it happens in 5 months. Who knows? So let's be prepared. And thank you very much. We are already at the bottom of the hour, so if either of you guys got to go, you don't need to listen to me blabber on. I appreciate your time, and we'll be diving into a couple things here because I am seeing some things that have caught my attention, have me wondering if we might be reaching a point of exhaustion potentially. And if I'm able to find where my chart is, I guess not. I'll just have to get a new one. So bear with me. Oh, there it is. Okay. Oh, geez, where'd it go? Oh my goodness, I'm losing it over here. All right. Okay, so I am just pulling up my charts now. It looks like my buddies are sticking with me, so I don't have to talk to myself, which is always nice. And here we go.
I just got to see what that, I need to watch you justify that sweater I owe you.
Yeah, I'm still waiting for it. Hopefully, maybe that'll be a gift at the all-time high party. That'd be excellent.
Yeah. Heck, I'll have to give you mine off my back to just sweeten it up.
There you go. There you go. All right. So as I was pulling up my chart, I just had these horizontal levels drawn that I have been watching maybe over the last 24 hours or so. For me, this wick up here is a very important level. If we were going to take out this high, this was kind of the level that I was going to need to see it hold.
What's the time frame on that, Saw? I can't see it.
1 hour.
1 hour, okay. All right.
And interestingly enough, I didn't think about it until now, but if I just draw in a fib using this low and this high, the 0.618 level right here happens to be right in line with that horizontal. So that is interesting to see that we have failed to take out this high. And now we have failed to support this, something I will definitely be keeping in mind. Right, let's go ahead and pull up EMASAR, see what we got going on. So the reason I drew that horizontal there was because it was a move above the sky, which is a very big deal. We really that's a big sign to me of a potential kind of top. Like if you're really moving, there's a couple ways that I expect for trends to happen. The linear trend would just be a move between the beach and the sky where you just move back and forth, nice and slow, 45-degree angle or whatever. The next kind of level of acceleration would be getting stuck between the sky and the 50 EMA here. That can lead to some very big moves. The biggest moves occur when you get stuck in the sky and you move up into it and come back down and turn that into support without even really sniffing the 50 EMA here. And then this whole move here occurred with the sky acting as support. We had the moon resistance here. And then when the moon resistance is met with sky support, that's when you really get that moon type of move, which then I would look for a move outside of the sky. Specifically, I want to see a close outside that basically qualifies. That's a little close, but here we see that's more clear of a close outside of the sky. So that's going to be something I pay very close attention to. Those of you out there, think about how you've been feeling the last couple days. As Joe mentioned, that he's kind of in liminal space now. That was music to my ears, as Fibbo and I have just been stuck in our liminal space, and Joe's just been smiling and moving in and out. So think about, where have you been feeling the most comfortable as this price has been moving up? Are you feeling comfortable sitting back and letting it go? Or are you on the edge of your seat biting your fingernails trying to figure out how are you going to catch the top, and then all of a sudden the top isn't the top anymore? The best way, there are a handful of ways that I've learn to just be very, very patient. When the market's moving, just let it move, and just be a happy camper. Let yourself feel good about being on the right side of the market after getting stuck in the liminal space, and then just have some things to wait for. So here, notice how we did get stuck in the sky, and we here's where we made the move above. So I'm going to go ahead and draw the horizontal on that wick, and then also on the close right here. So this is telling me that this is a big divergence from the mean, that that should be a very important level, that if we're going to continue to progress and diverge from the mean, that is where I would expect it to turn into support. And then notice how as price moved back to test the bottom of the sky to see, are we going to get stuck, and we're going to keep being stuck in here, we happen to also be testing that close right there. So that was a critical time and area for me. If we were going to stick in the sky and keep moving, we could be at 13.9 right now. But instead, we have kind of fallen below, and now notice how sneakily it's starting to turn into resistance. And there's a couple things that I'm going to pay very close attention to. First is going to be the sky flattening out. Notice here how we had multiple, 3, 4, 5 closes below. It looks like maybe it's starting to turn into resistance, but the whole time it continues to trend up throughout this test. So if you kind of come down and you test, but the sky just keeps moving and moving, and the momentum and the wind, it's just everything keeps moving. Okay, that's still acting as support to me. Whereas here, this was the critical kind of area right here. If we were going to support this level and then create a new high, I think it needed to happen right in here, because now what do we see? This sky's really starting to roll over. A couple more candles. This is the 1 hour. I would expect this to just be like flat, basically. And in that case, that would be my signal that we had the move above the sky. We fell below, and then the sky flattens out. That would be a signal of a top. And then the number one thing that I would be looking for on moves like this is a 1 hour storm. And that's what we just got right here, when the sky, it kind of is our measure of exhaustion, when it goes from clear skies to partly cloudy to cloudy to stormy. It's like we've got we're on the water, we're sailing, it's clear skies, it's partly cloudy, it's telling us, all right, we're good. Now it's telling us, okay, we should be ready to make some moves and be ready to get out of here before the storm comes in and ruins the party potentially. So that's kind of how that progression tells us to, like in here, what was that, 2 weeks ago? It tells me to, not even worry about this storm for weeks. So it kind of helps me mentally to sit back and prepare and have an idea of how long consolidation could occur, that sort of thing. So now that we are below the sky looks like it's flattening, and we're in a storm, and we're below this spot right here, this would tell me that I'm no longer interested in doing something like buying this 38.2 level here, because I'm now seeing significant signs of exhaustion, and maybe it does hold and we continue higher, but it's just not a spot where I would be viewing the odds in my favor to buy this dip around. Fibbo was mentioning 12.7, 12.7. I don't think that's going to hold because of the reasons that I just listed. But that being said, I still do think it's a dip in a bull market.
When you say a dip in the bull market, when you say pull that the last chart you just had up there, the where is the level of the beach at on the price level?
All right, so great question. So this tan area here is the beach, is going to be the buy zone. And then what's cool is that when the exhaustion is signaled, the beach disappears. It's kind of telling you no longer do you want to buy. So what EMASAR is actually saying right now is that 11.6 isn't going to hold, is what EMASAR is saying, because the beach should be from right now 11.975 down to 11.625. That's where it should be, but it's not, because it's disappeared, and it's telling us kind of what I just explained, that yeah, the move happened, and if you missed out on, so this has been in our bull trend since down in here. This is just basically telling us that if you missed out on this 35% move here when the signals came in down here, that you just, this isn't your spot to go. You missed out, and maybe it will hold, but it's telling us that there's no longer actually a beach on EMASAR. So just to clarify there.
Okay, that's what I was just wondering where it went. Okay, that's what I was asking.
Yep.
Okay, I just want to know what price level it was. I was trying to compare it to where some of my fib levels are, and I was just curious. So.
I appreciate that. And that is where actually, and the one thing that I wanted to clarify is that as this continues to move up, that 11.6 I do think is going to hold, and EMASAR will continue moving up. And if it takes us, a while to get down here, then by that time, this bottom of the beach will be all the way up around that 12 level or something like that. So the 11.6 right now is where that's saying there shouldn't be the support that we would expect. But I think that by the time price gets there, this will have progressed enough such that now the ocean is there, which now that's where I would be looking at as the level of support. So I just wanted to clarify that, and I do appreciate you asking, because it's great to get a feel for how the things do come together.
My 61.8% on my threshold on the hourly is at 12K. That's why I was curious on how close it got on that.
Yep.
I was just curious.
That will
and actually on the hourly right now, I'm actually getting if it closes this hour down here, it signals a sell for
interesting.
Me. So
that's very interesting. I would be thinking that there would be some sort of.
Still got 16 minutes, but
yeah,
but 12.5 is the shallow fib to watch on the hourly for me. That's why I was wondering where the beach came into play, if it matched up at all.
That's
pretty close, but
that's great. Yeah, I think that'll be a very interesting level to watch, because that is such a dynamic level that right now it being like 12,000, basically where I would expect it to be by the time price got down there. So something to keep in mind, and reminded me to visualize the stuff that I was just sharing earlier about using the fibs with the buoy. So let me get on a more normal fib here so that you guys can see what I'm looking at. I made mine double-sided and found it super valuable to just have, whenever I draw a fib, I just have it double-sided on both sides, and those levels are just very, very good to have. So let's see here about that one. Yeah, that'll just have to do. Okay, so here is this white line right here. That's my 0 level, and up here, or that's excuse me, like that would be the 100% level. And then so here I would just start the fib on this low right here, because you break the buoy. So that's going to be my critical level. So what I'm going to want to do is connect a fib to when this what the price of the buoy was when it broke. That's what the marker is going to turn out to be. So I view this as my critical level of liquidity, and I want to connect it with the low that started that move to where that buoy is. And if price fails to get to this very faint line that you can barely see here, which is going to be the 1.272, if it fails to get there, it tells me to look out for a range. because it doesn't have the strength. It just kind of came up and sniffed and tested right in here. And if it fails to get to this 1.272 from this fib here, it tells me to look out for some sort of choppy environment. Whereas if it does, it tells me that this marker, this zero level here that I'm drawing should be a very good level to buy. So that was something I mentioned earlier in the show and just wanted to visualize that for people. One other thing that I wanted to mention, if you do find yourself just having a hard time, in liminal space during these types of moves, wondering, feeling like every pump is a short and just getting blown out. And then as soon as you decide to buy the dip, you just bought the dip that never has support. Maybe day trading is going to be a better option for you, or maybe just figuring out some tools that can help you to wait. For example, the TD sequential. If you've got a TD sequential and you really trust in the nines and you're on a 4, then you can just leave the computer for 5 candles, 3, 4 candles, set a couple alerts and just forget about it. And that is what I need. Like when you're really out there and the market's moving, I need that some sort of signal. My best signal in Bitcoin has time and time again has been these 4-hour shooting stars. When the market just gets moving, I just expect it to keep continuing until you get a really severe reversal wick. So this is the reason why I had this top level drawn here, was that when you get a shooting star, a couple things are implied and or signaled. First of all, you have to break down that level to confirm it. So here you have your confirmation of the shooting star. And then the second thing is you have to stay below this high. So something that I talked about, it's been a while, is a setup called I'll refer to it as re-exploring the wick. So you have a shooting star, and then you say that your sell zone is the wick. And this is something Joe talks about, the wick space, seeing a nice wick and then looking to enter on the wick space. What I love about this setup here is the risk reward. The higher into the wick space you get, the better the risk reward becomes. So if the top of the wick invalidates the candle, that is true on a wick or a close. Like you can't wick above this wick. That high has to hold, or else the shooting star is invalidated. So therefore, the sell signal would be when you re-explore the wick, and then the stop is slightly above the wick. So as long as we are below this wick, I am thinking that we're going to be due for a bigger pullback than just a little dip, which will still very much maintain the bull market intact. Looking at that like 11.6 level or so. Again, turning prior resistance into support is what I would be looking for there. Okay, one other thing I'm wanting to share is the TD sequential. So we got the something else that I've noticed for me personally is that the TD sequential on the 12-hour is very, very effective. It's effective on all time frames, but the higher the time frame, the less people are really paying attention or able to act, and therefore the more effective it seems to be. So we did get this 12-hour 9 right as we're getting that 4-hour shooting star, which is what I was waiting for. So that was something that very much makes me sit up in my seat, and then the 1-hour storm comes in. So therefore, thinking that we are in for that this is a spot to take some profit, and I have been, and I was at even lower prices. I don't have it written down exactly, but I believe it was the 12.7 actually that was where I had started selling for much different reasons. So this is what I think would be a spot to kind of trim above these local highs and look for maybe a pullback to this zone right here, which would be 12.1 to 12.5. I will be interested in that area myself. I've already got some orders set due to EMASAR right here. So what do we have? We have this move that takes out the buoy, and then we draw the fib that I was just mentioning from this leg that started that move that took out the buoy, and we smash through the confirming zone to say that that this is a trend and that maybe we shouldn't even expect it to return to the beach, which is now at 10.8.5, and that this is now a buy signal for me. So I do the stuff when that happens. Once we do get to that level, that tells me that I can kind of start selling above this level. What's that, 12.6? So that's probably where around where I was starting to sell, that I can sell above that level and then enter the orders to rebuy around 12.35. And even if 12.35 doesn't hold and isn't the bottom, it doesn't matter. I'm not shorting. I'm just taking profit on spot. And if I get to re-enter here, well, then I just beat the market. And that's all that really matters. So that is, I believe, everything that I was wanting to talk about. As Fibbo was going over things, that made me think of looking at the 1 hour RSI to see there should probably be a div in that if my read on the shorter time frame is correct. So let's go ahead and take a look there. I'll go ahead and so let's see, we got that higher high, that higher high, a small div there, and this is the kind of more significant one as I've started to pay attention to these zones that Fibbo talks about. Notice how this move here came with the RSI above 70, and then the consolidation came with the RSI below, and then the move happened with the RSI up here. So this is like your big bull zone, like your big trend, and this is maybe your consolidation within the trend. So notice how we on this move have come down and we're not supporting the RSI within that consolidation within the bull trend zone. So we do have a small div, but what's the most important div to me is this one, where it's a much lower high in the RSI, and this is like an equal high basically, if you ask me. So I will be interested to see what happens. Like Fibbo says, one step at a time. Let's just wait and see. There's nothing we can do other than being prepared and taking it a step at a time and not trying to get too far ahead of ourselves, and also not trying to get too overwhelmed with the volatility, because that volatility it screws with your brain, and whoever you are, you've got some sort of liminal space. And bring it back to a nice conclusion with what we started on the I've never met anybody who's really good at day trading and swing trading. And now that I'm thinking about it, it's like we've all got our own liminal space, and we've all got the stuff that we can really deal with very well. And yeah, I've never met anybody who trades without liminal space. I've met people like Fibbo who've been able to figure out how to set parameters and guidelines to help themselves manage that. But I've never met anybody who just like has none, and therefore they can just trade any time frame all day, every day, no problems. So recognizing, just think back over the last couple of weeks as price dumped down to 10,000. Remember, we were live doing a show, and you could, if you were watching, you could probably tell that Joe's in his liminal space as the market's moving real fast, and price is under 10,000, and yada yada yada. And Fibbo and I was like, it's just a dip, no big deal. And then for the next 2 weeks, Fibbo and I was like poking our eyeballs out basically as eating a nothing burger and starving for a steak, and then. And now Joe again today admitted, I couldn't tell it at all about Joe, but today he admitted, he's like, yeah, I'm feeling kind of liminal. So ask yourself, where are the spots where you've been feeling the most uncomfortable, and then figure out how to tailor your approach such that you just stay out of the market when you're in that super uncomfortable spot. Because the challenge isn't really making the money. The challenge is keeping the money. If you're able to stay out of those bad times, then that will allow you to keep the money from when you find yourself in really good spots. So with that being said, I think we had another great show. I really appreciate you guys taking the time. You get a lot more out of me by you being here, and I get a lot myself just getting to learn from you guys. So thanks a lot, and I'll sign off with a new nickname. I was hoping to see a little fear in Joe's eye before I.
I'm hoping it's going to Joe and not me.
Well, that's what I wanted to give a little pause there to see if anybody was afraid. So this nickname, it's not for Joe. Joe, he might just have to be Joe from now on. My new nickname for the other co-host is the Defibrillator.
Oh. Oh no. Yeah, we're gonna have to talk offline on that one.
Yes, I like this one already.
Oh shoot.
All right. Well, thank you everybody for tuning in. Let the Defibrillator know how you feel about his new name on Twitter, and be sure to give him a like and a follow, and some good comments for everything that him and Joe have been sharing with us on a weekly basis here. Really appreciate the commitment and time, and we will catch up with you guys next week.